Good morning, natural gas traders. Welcome to the every Saturday natural gas and commodities update, where I update you guys on natural gas and UNG, which is the tradable ticker for natural gas. And we'll do a quick explanation on oil and cold, as well as we'll be breaking down gold and silver. So let's get started. So we are looking at natural gas on Wednesday. And I was talking about where I did not like this bull break and with lacking follow through. What that means is when we break a resistance level, um, usually what happens is that you will see a follow through from the bulls when that resistance is broken. And essentially, we broke the resistance and got zero follow through from the bulls, and bears took over for that day. You can see when we zoom into the 15-minute time frame on that day to see what happened, we can see that right here in the morning. Decent gap up, broke resistance, and no more buyers left. And you can see all of these selling volume just came in. Okay. And I said that we have to, it's still okay for the bulls on that day. I remember talking about it on Wednesday, saying we have to hold these this support zone, this 2.6 and 2.62 zone, because that was our prior resistance zone where it was very strong resistance over here. You can see that we couldn't get over, even over here as well. So when we come down to it to retest that support zone as a bull, it goes with prices above it. Now, prior resistance, now it's going to act as strong support. And I said if we hold that, then it's zero red flag for the bulls because the trend is still in favor for the bulls. So essentially, we bounce off of that exact level, which is good. And we bounce off the 12 EMA. You can see this teal looking line. That's just the exponential moving average at the 12. And there's everything is good for you guys bulls since we are still in a daily uptrend. So this is how a trend works. So initial move, candle down, candle's got to be lower than the prior candle. So that's the pivot. And we broke above. So that's a daily uptrend confirmed. Now we also back tested again, have a pivot confirming the following of the daily uptrend. And now we have another pivot. So this is our new pivot set now due to candle being closed below the prior candle. And now this is the next move. So can the bulls continue their daily uptrend next week? So we'll see if we can break this prior high, which is where we failed last time, right there at 2.8. And if the bulls cannot get over that, then the bears are going to come back again. So we'll see on either Monday as half a trading day and Tuesday is a holiday. So either we can see if Monday the bulls can break this 2.8 resistance zone or not, because that's going to be key for the bulls due to last time. You can see that was zero, zero follow through there, absolute zero. You can see it's peaked right above it, broke above, and notable selling right through. So let's see on the so currently on the hourly trend is still favoring the bulls, even though we had this bear attack. That's essentially what a bearish move is. But so what you can see is that the bears showed up here, right? Um, they're like peekaboo, and here we are again. And you can see this very shallow bounce here, and they confirmed a hourly downtrend. So that is a good sign for the bears. But it's very notable here that it was also lacking bear follow through. So right when we broke this pivot right there, the initial move, bounce, broke that pivot low from this candle. See, we went below it. Now that's an hourly downtrend confirmed with zero follow through from the bears. Bulls just bought the dip and negated that hourly downtrend, essentially. So now the hourly trend, see, now this is the pivot low and broke above the pivot high. Back to the bulls. So bulls literally just negated this bear downtrend in the next day. So I would say right now, bulls are still in full control due to even the shorter time frames are also in favor of the bulls. So we have daily uptrend in favor of the bulls, as well as the hourly uptrend is also in favor of the bulls. If you give me this chart and we had this here, and now we broke through that, then that would be a big win for the Bears. Um, you can see how many times the bulls bought this dip over here, right there. It was a strong, acting as strong resistance. So now, when we come down to it, bulls will buy the dip to defend this support zone. And we back tested this higher support zone. The 6.66 and 6.62 is the support zone. You can see we bounce, back tested that, and we went higher. So that's perfect for the bulls at the moment. Now we came back up here. Of course, when we come back up here, we're going to test this resistance initially. And this I wouldn't say it's a retraction, even though we had two red candles on the hourly, because we just ran out of time. This could just be a consolidation to the next move up, and the market just happened to close. We don't have that many hours in the market. Uh, so unless I see a notable drop where we confirm something like this again, where the hourly downtrend, then I would say this is a clear rejection from the Bears playing defense up here in this zone as well. So essentially, for you Bears and Bulls, um, Bears, you want to defend this zone and not that the Bulls get above this zone. Otherwise, there's going to be a lot of room for the Bulls to keep running. I'll show you guys in a second how much room there is for you guys to run. And for you Bulls, definitely want to play defense down here and not let the Bears break this 2.66 zone. Essentially, it's just a battle between Bulls and Bears and the sideways zone in this coming week. And you zoom out and see whoever wins this battle, for the Bulls, you would get, if we win this, break above this prior high where that 2.8 is, we're very likely coming up to this $3 level zone because there's just not a lot of volume here. You can see how thinly traded here, and there's just one candle here is after we break that $3 zone. So essentially, the psychology of volume is, um, let's say Joe, Bob, Smith, Heather, or Bob decided to sell or decided to buy the stock here during this time over here and over here. And when the price comes up, let's say you waited for a half a year to want to sell your position to just break even. You had enough of this stock and you're just like, I just want to get out, break even, right? And so when the price comes back up to it, you would sell to, get your cash back and break even and not lose any money. But there's only, Bob Smith and Heather here. There's only three people that decides to buy here because there wasn't a lot of volume. So when the price comes up, there's only going to be very little sellers to sell, and it'll be easy for the bulls to move through this stock. Same thing happens if the stock comes down, right? When the stock drops, if there's little volume in that area, this means there's not a lot of support. It'll just be very easy for it to cut through it. So now, if the bulls can get over 3, very likely we will be going up to, if the bulls can get over 2.8, we'll very likely going to 3. And if we get over 3, then it'll be price discovery mode after that. It's just like when how you go to all-time highs and it's just kind of price discovery mode, and due to the not being a lot of price action here, so we don't know where after that it's going to act as a strong resistance. We have to scroll back to a little bit later before in history to see where there was stronger resistance. So that will be right here. You can see right here. We couldn't get over it. I'm going to say slightly lower because of this chop zone right here. Usually when we came down to it, we acted as support a little bit. We bounced off of it a couple of times, and then when we broke through it, you can see there's a big flush because there was a cluster of support back here and a little bit of cluster of support back here. So It's gonna be my next resistance zone. We can just adjust this a little bit. Support and resistance is never a single dollar. It's usually a zone. So that's gonna be the zone that I'll be looking at when we come up to it. You can see we reject a couple of times here too as well. So that's still quite a bit away for the bulls, but I'm just gonna give you guys a bigger picture so you guys can um, know where it might headed in the longer term. So still 28%. It's quite a bit away, but because even on the weekly time frame, we are in favoring of the bulls as well because bulls have a confirmed weekly uptrend for the very first time in a very long time. So, but we got to be careful on the monthly is in favoring of the bears. So the monthly time frame is still in the bear flag due to how much we have dropped. So from the top of this move, A to B to the bottom of this move, we are in a bear flag territory due to us not getting over 38.2%. So that's a bear flag. As long as we're under 38.2%, it's still a bear flag. What a bear flag looks like is just like this. Bounce, chop around, bounce, and reject, boom, goes lower. That's how a confirmed bear flag works. But that would take us into next year if it's a confirmed bear flag due to one of these candles. Each candle is 1 month. So we only have 6 of these candles left. Let's say 1, 2, 3, 4, 5, 6 rejects, and we still don't have a bear flag confirming it unless it breaks this low, which is probably not that likely due to us even being historical lows. There's a lot of support down here, so I wouldn't say that would confirm, but be initial rejection, just like for a decent drop, but not like all the way down here. That's got to be notable of that on the monthly chart. Still a monthly bear flag, but the weekly, daily, hourly, all the trends are currently in favor of the bulls. So that's a good sign. And so we have done talking about the bull side. So let's say the bears win the battle here and they break the support, right? From this 2.6 support. Where would they go? The very first support for me would be this wedge resistance. You can see we have take out 6 months to get out of it. Resistance, 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 resistance. Now is acting as support. We even backtested here, bounced it off of once. So when we come back to it, if we do break 2.6, that's going to be the very first support that I'm going to see if the bulls can hold, because I don't want to see bulls the price get back into this wedge if you're a bull. So say we have 1 day, 2 day, 3 day. It very likely coincide with this 2.3 level if it takes 3 to 4 days to break down to that level. But if it's like a one huge flush, obviously that'd be a big red flag, and probably won't be able to hold it if that's like that. But if it's like a slow grind, we kind of like go down, up and down, chop around, come back up, reject, and then come down. It'll likely coincide with this 2.3 level potentially with the wedge support. So that'll be a confluence of support. Best thing is if you have 3 confluence of indicators for one area, then that'll increase the chance of your probability of your trade working out. So because you can see this zone down here, this whole cluster of volume is where it used to be traded. So this definitely going to be act as strong support. This one, yeah. So that's where you bears want to. You break this, you're likely to be able to come down here to this 2.3 for a win here. And if we do break this, then we're testing the bottom of this one, which you can see is acting as support. So this one will be bottom wedge support. It will be the last support. If that breaks, we're going to go to 52-week lows, which is all the way down here. We will come all the way down here if that breaks. That'll be $2. Yep, so I gave you guys both case scenarios. And as of now, make sure to follow the hourly trend. So the hourly trend is going to be your guys. Just go to the hourly time frame. As long as the hourly trend is in an uptrend for the bulls, we have nothing to worry about. Even though if we drop back down here, you'll likely act as a tiny support down here, so we could potentially come down to this 2.72 area, bounce, and then come back to retest this again. We do break this little chop area, we're definitely coming back down to test this bottom support again. So hourly trend is your guide. And if you see something like this, where there's a bear break, the next thing you know, a V shape, it just means there's a lack of follow through from the bears. Same thing as back there, we had a pop right there, broke above, V shape the other way. That just means lack of follow through. So now the battle is going to be right here. So, all right, let's take a look at UNG real quick. So UNG, same thing. You can see we bounce off of this 12 EMA support, a teal looking line. So essentially, it follows net gas, but this is just a tradable ticker for natural gas. So now I want to see as also a retest is 7.6 zone, and the bears would be looking for this break of this 7.14 zone. So similar to that bear and bull fight, right? They're going to see who's going to win this zone. Although the trend is still in favor of the bulls at the moment, still an uptrend on the daily. So same thing, we got to look at the hourly guide, and we'll see. Hourly is also in a uptrend. So we'll see if bears can show up. If not, bulls are going to break above and break this 7.6. We're going to head to this 8.21, 1.2 zone. So yeah, looking good for the bulls. So no red flags at the moment. All right. Well, it's just a 2x leverage. So if UNG goes up, let's see how much we went up that day. UNG goes up 3.3%. We just times that by 2. Well, it would be up roughly 6. And same thing for gold, just the short side. So if you want to leverage short, this would be 3.3. So you're also down roughly 6. So you'll buy the stock and it's going on the short side for 2x. All right, let's take a quick look at gold. Gold falling wedge, still in play. See this mirror looking line. And I was talking about that. You can see this support right here. Support, support, support. And we bounce off of it. So it's looking decent for gold initially, but not. We're still in a daily downtrend. So until we change the trend, you can see still a daily downtrend. Until we change the trend, big enough bounce and break out of this wedge, this wedge could likely going to continue to play out. So before that, we'll just have to wait to see if gold can shape up a better trend change in favor of the bulls. Right now, it's bouncing off of the support, so it's still good at the moment. And this could be potentially a place to add right there, and then you can just set your stop loss below that 19,000, just in case it breaks through both of these support and you get a small loss. As we're coming back down here to this 1869 level. All right, let me see how much. Let's take a look at silver. Silver is similar chart due to gold and silver runs together. You can see this falling wedge as well. And the support from the silver is a bit further. You can see bounce, 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 bounce. So we are not even close to that yet. So, but silver is a little bit stronger. So it hasn't even tested that longer term support. So silver had a big enough bounce here. Now this can potentially change the trend back in favor of the bulls. If we do break about this prior high right there, $23.09. So if Monday we break above that, that's a daily uptrend confirming. As of now, not yet. So this could still be a daily bear flag as long as we don't get over that 23.09. So that's going to be the most key for me. Also, we bounced off of this 200-day moving average, this yellow looking line, and held it. So potentially good for the silver bulls if we do break above that's 2.8. So all right, that's all I got for you guys. And feel free to comment below if you guys got any questions on any of these stocks. And I did a hour video on the S&P 500 and QQQ and the big tech stocks, Amazon, Google, Microsoft, Meta, and NVIDIA. I think I said Tesla as well, but all 7 big tech stocks yesterday on the market update. So make sure to check that out. And I'll see you guys for another day update. Have a great rest of you guys this long weekend.